So good morning, everyone, and welcome to yet another session of SMS. So over to Venuji first for the opening remarks, and then we'll go to RPG. Venuji, over to you first.
Yeah. So again, welcome all. And the only request, please join, keep it in the schedule, unless otherwise we say no SMS. SMS is there. And we will continue the discussion of GST 2.0. And I'm sure after the notification and circulars coming in, we will have a deeper thinking. But for most of us, there are clients already calling, what do we do? How do we need to do? So we consciously chosen that we will not discuss on the rate, but there are other implications that would be there, which we should be aware in communicating to the client, or as a faculty member, if other CA is asking, what is that we need to tell them. So instead of that, we started this, and today we will have Deepak joining, but RPG would be continuing from wherever we have left, especially on the credit note and post sale discount. Yeah.
Yes.
Over to you, RPG.
Yeah. I think RPG, yeah, he's not joined yet because he's just got some stuff. Oh, he's
No
joining.
problem. So
He's
till
joining
he
one minute.
joins,
Yeah.
no
Yeah.
problem. Till he joins, so we also have discussed on the post sale discount earlier.
Yeah.
We need to actually look at this in light of the circular 105, which has already been rescinded, withdrawn. And this is one gray area which we all have to figure out how do we address when we are telling to the customers or everyone. Because whenever we get a financial credit note, it has two characteristics. It could be because I have made more purchase, they given me a credit, or because I have made more sales, they have given me a credit. Now, both may appear to be the same, especially in the festive season. To push the products, they say you go ahead and give some discount, I will offer you back. Now, it is akin more to the sale, or to push their products. If you buy more products from me, I will give you more discount. Now, either case, manufacturer is pushing his product, but the context is little different. That he is looking at pushing his products. In one case, it should be added as an output tax. In another case, it should be reduced from ITC. The challenge that comes is when there is a financial credit note that has been passed on. And even we all know about a regular credit note, so Section 34 compliance is there. But the gray area which is to be discussed is, in case of a financial credit note that is issued, where the supplier has not reduced the liability, the obligation to reverse the ITC, would it still be there? And conditions of Section 2, 16 2 proviso that failure to pay is also taken care. How will we handle that is something we have to more internally discuss, evaluate, and come to a conclusion. I am not sure what is the circular they are going to issue for handling the discount from the manufacturer to dealer and addressing various scenarios. But anything, Arubda, you want to say from the kind of discussions you are having with the department?
Yeah. Actually, the basic premise of this amendment, I would say, would be that there is a huge demand from the trade for the last 2 years, wherein notices were coming mainly from central GST in the during the audit phase that this post supply discount, you have taken the credit, you have issued the credit note, but give me a proof that this particular agreement was in place. And in many of the trade bodies, it was the fact is that the agreements are not literally in place because these are some simple letters, some simple mails, or maybe a flyer also. So department was actually contesting those agreements and saying that we will not allow the post supply discount credit note, even though we have reduced our output tax liability, the recipient has reversed his input tax credit. So going on that premise, we were of the view and we were pushing before the department that since this credit note has already been issued by me and my output tax has been reversed, the recipient has reversed his ITC. So where does the question come of my credit note being disallowed? just because of a simple document. Maybe the agreement, because, and we also argued that Contract Act says, the agreement can be oral and written, concepts like that. So because of that, now the terms regarding to agreement that has been removed, which I'm sure is a welcome change, because this will relieve many of the taxpayers from the burden of proving that there was an agreement in place, written agreement in place, which said according to what. Because at times it is differential also, right? We were handling a matter wherein they allowed a post supply discount to one of the distributors at a very high margin, because he did a huge sale in his area because of some local festival or some local program. So all those things were being contested. So I think now this will bring parity, and this will also allow the trade to do their business as they have to do it, and not as per the law, by citing the agreement, first prepare the scheme paper, then give the discount. All those things have been done away with. But I think now one major question I think we would like to discuss here is whether this is prospective or retrospective. That is something that needs to be seen, because now also many appeals are being filed which are just on the basis of the simple thing that the agreement was not in place before issuing the post supply discount. So the view,
Arupji,
yeah, Arpit Buri.
what just adding to what you are saying, that what you have said exactly a same matter which we are handling and at our place, wherein a tax liability of 25 CR has been made just because stating that whatever agreement you have produced, they were not made before the time of supply, and since they were not executed on stamp paper.
Okay,
Hello.
so I think that, yeah, that is a major hurdle that we are
Yes.
facing.
Yes. So precisely what the reason what you are saying, the trades are facing it at the ground level, and it's a very welcome step.
Yeah. So now, what will be the way forward? I mean, so is it that at any point of time, like say even after 2 years, or I mean, say within the period of 16, like whatever the restrictions are there regarding issues of credit note, whether we can just go on and issue any kind of discount? I think that is one major question that is being asked now. Or it
Now
has to.
now what would be happening, that the government would have to be very clear about what would be treated as a discount, because prior to this, when section 15.3 was there, so 15.3 at present which is there, so it has to be either on the invoice or through a agreement. Now supposedly this provision is removed, and then subsequently supposedly I have issued an invoice of say 1 lakh and I receive only 80,000. So then can I issue a discount, a credit note stating that it is a discount of 20,000, because there is no pre-agreement, neither the amount has been shown on the invoice. So this would be another litigation, that what would you treat it as a discount at that time then?
Yes, I think before that, I think this is one important thing, and I have a twist to this story also, wherein there is a twist to this particular story wherein we had faced a practical problem. So before that, I think we'll go to the house. If anybody has any other views on this, on the post supply discount changes that are coming in.
Hello.
Yeah,
Yes, sir.
Yeah, hello, sir. Himanshu here.
Good.
One more thing I want to add. Like Vatao Kasar, if you know, small discounts while paying the people square of the amount. Like here in Surat, it's a very common thing. If there is an invoice of say 10,111, so they will just round off to 10,000 and they will do discount of 111 rupees. So till now, it used to be like a just a book entry, not even a credit note officially was issued. But after this circular or the what is announced in this council meeting, the language says that it will be mandatory to issue GST credit note. Though not much financial impact, but it will create a lot of chaos, I think, if that comes even on such small amounts. So if anybody can share their views on this case as well. Thank you.
Arupda Gaurav here from Ahmedabad. One more view, that is, there is Circular 92 of 2019, which is still in force. That has not been withdrawn. That also talks parity about secondary discounts, which in kind of addresses to some extent the issues here.
Right.
And which is still in force. It has not been
Yeah, 92.
withdrawn. Yeah.
Yeah, so
Yeah.
I think one.
yeah, good morning. This is Saravana here.
Yeah.
So, two inputs from my side. Probably one is the circular 212, as the honorable members here would know, was also extrajudicial in a lot of ways. So it had a lot of conditions, etc., especially the point of view of certification. I think with RPG was also trying to point out the certification point of view not being satisfied led to a lot of demand, because you can imagine hundreds of vendors, I mean hundreds of customers for whom the certificates have to be collected. So that was also a problem. Now this circular now being withdrawn, again, as you pointed out, what happens to the matters or the orders issued prior to this withdrawal date? So as you said, prospective or retrospective application of a circular, which in any case was extrajudicial in a lot of this. So this is one aspect probably we should contemplate. Second aspect, I'm not sure whether we discussed it, but if you remember budget 2025, the budget also mentioned Rule 67B was proposed to be introduced for the very same aspect. So probably once the circular is withdrawn, this Rule 67B would probably address a lot of things regarding that particular aspect. So, two inputs from my side.
Yeah, I think the withdrawal of the circular is a wonderful move, because when you have, say, around 800 distributors to whom you have issued the credit notes, and you need to get a declaration from that they have reversed the credit, I think it's more of like compliance leading the business rather than business leading the compliance.
Absolutely. And as you were pointing out, many such companies, the matter runs into multi-crores, 30 CR, so on and so forth.
Yes.
So, yeah.
Rupda, one more thing for this, after withdrawal of this 212, the BB&T issue would also be addressed to a great extent, which many industries have.
So which issue? आपका थोड़ा voice drop हो गया था. Which issue?
The BB&T build but not dispatched, and finally they reversed it because it finally could not be dispatched because the distributor refused to pick up the stock, or there was no room available, and the material never left the warehouse, and they were supposed to take a credit note. That also will be a big safeguard to the industry.
Right.
But circle number 212 did not require a certificate for that point.
Not for BB&T, yeah. Or it was for post-submit discount, there is an issue.
सर पर क्रेडिट सर अर्पित जी क्रेडिट पर तो था ही ना, अगर आप रिवर्स कर रहे हो.
पर वो सर सेक्शन 34 का क्रेडिट नोट था, and for section 34 now by a finance act, that condition would be brought in place that the ITC has to be reversed by the recipient.
Yes.
So for that aspect,
it's a welcome thing, sir. It's a welcome thing. BB&T का issue भी address हो जाएगा उसके. That is what I'm trying to say.
Yes. No, yes, giving a twist to your question, which you said, na, ki, say, I'll give you a practical example. What happens? What will happen maybe? Which is 1 crore billing I've done in the month of March. Now March 25. So I go say in August 25. Say in till April 25, I've cleared 80 lakhs or maybe 90 lakhs, and 10 lakhs are left. That is disputed. So now that is the dispute is going on between both of us, and suddenly in the month of September, I go and issue a credit note. So now what will happen to Rule 37? That is a bigger question that the trade is asking. Because of this, now previously what was there, this agreement thing was there, everything was built in. So at least the suppliers, they also had a context कि अगर मुझे credit note issue करना है, there has to be agreement, there has to be something in place. But now with the doing away with this of the agreement, whether this challenge will increase. You know what is happening? What is happening is that 1 crore, it is not there, and 90 lakhs you have paid, 10 lakhs you have not paid, and the dispute goes on, and finally they agree, okay, you give a credit note. But in the meantime, since dispute was there, you have not, issued the credit note, or you have not made the payment also. So now whether Rule 37 will trigger on the closure of the 6 months or not. Now what will happen in that case? Do I need to reverse the ITC? But ultimately, there is no failure to pay because there is a credit note issued, but yeah, not within 6 months, within maybe 9 months. Or maybe 7, whatever the timelines are. So what will happen in that case?
In that case, once the 6 months period has completed, so the reversal would be triggered. And then subsequently, if the credit note is issued, so in that case, whatever amount is there, since the reversal would be a temporary reversal, so I would reclaim that and again claim it and then reverse it.
Yeah. So whether this issuance of credit note will be treated as a payment, so that is the thing.
That is one thing, and another thing is that whether the department will allow to reduce the output liability from the supplier just because the payment has not been received. So ultimately, with incorporating the 15(3)(b) in section 34, there would be a lot of challenges, and the government would have to be very clear that what is the scope of discount and how it would be defined. In my view, they should come out with the definition of discount also under section 34. Else, it would be a Pandora's box. Any payment not received, issue a credit note, even though supply has been made. So ultimately, by this, the GST would not be a tax on transaction, but a tax on payment received.
Right. So we maybe are going back to the service tax days.
Yes. Yes.
That would again be a challenge. So any other view?
Arup,
Deep-
Arupda,
Yeah.
Nilesh here.
बोलिए.
Yeah.
Arupda, with respect to billed but not supplied, that kind of credit note, we are also facing challenge on an invoice cancellation. What happen if I created invoice and due to some reason I have to cancel it? I cannot issue the credit note. This challenge has been faced by me in couple of cases, and it was very tough to explain to authorities that credit note can be issued, because if we read the credit note section 34, this criteria never cover it. So they said you should apply for refund for whatever the invoice cancellation has been happened, and not as a credit note.
Yes. In West Bengal, they have gone a step forward. What are they doing is they are saying, say in your example, only invoice is of 100 rupees and credit note is of 100 rupees. So what you have done is you have neither booked the invoice or neither you have taken the reversal for the credit note because it is not there in your books of accounts only. I'm saying from the recipient perspective. So in the recipient perspective, they are saying that, okay, since this thing is not there, so give me a declaration that you have not you have not got the credit note and that's why you have not reversed it. So now they're taking the declaration and going to the supplier and saying that your recipient has not reversed the credit note. They're not saying that your recipient has not availed the credit note, the ITC on the invoice which you have issued, but they are going directly to the point that your supplier, your recipient has not received the credit note as per their certificate. And therefore, on this particular credit note that you have issued, we will not allow the reversal of the output tax liability. So I think this is one major issue I think which is coming up now because all these matchings are there. Now there is cross-functional reference also. Means central tax is sending data to state tax and those references are there. So wherever we are issuing invoice for 100 rupees and reversing the credit for 100 rupees, I think that is again a challenge that is being there and which is being not covered. So whether we can say that we have given the discount in this cases because 100% discount will not be allowed. Because these are all mainly bill but not dispatch as we were sharing. Or maybe there is some wrong billing also. In some of the cases of our clients, there was wrong invoicing only. It has to be to GST and X. By mistake, they raised the invoice on GST and Y. So then they realized it and they issued a credit note to GST and Y and issued a GST and X to GST and X on the same day. So even in those cases, I think that is again a challenge. So any other member who's facing a challenge on this or how they handle this particular issue?
Sir, good morning to all. This is Archana
Good morning,
Jain.
ma'am.
Yeah, so with this, with respect to this credit note, now there is one more peculiarity. Even if supposingly I have not received the invoice and the mechanism as discussed earlier that we should be issuing a credit note, but then we have to also understand one thing, sir. Supposingly the invoice has been issued and the same has been say not accepted by the recipient. In that scenario, how can I issue a credit note? Because he has not even taken into consideration the inward supply. So the moment I issue a credit note, either he will reject because otherwise his credit will also be reduced without even he has taken into consideration the ITC which has been flown through the invoice. So we have seen that scenarios also, that supposingly if in this month I have reduced the ITC on my own, then next month or 2-3 months later on when that credit note pop up, then my that month ITC also get reduced. So as Arpit sir said that if it is a temporary reversal, I can still take care of it. But in case I have taken a permanent reversal call, then again it is a challenge for me.
Yes, ma'am. And this challenge is being faced all across the trade. That if they have
Sir,
permanently reversed any ITC,
yes,
then
correct. And
subsequently a credit
very
note comes, then
difficult
what to
even
do?
to Yes, and very difficult to make the department also understand that I have already reversed and now this credit note is popping up, so my ITC should not be reduced.
Yes.
Because I mean there is a period mismatch. So credit note itself it's is a problematic thing.
And more than the credit note, a permanent reversal is more problematic because if we reverse it permanently, then everything is gone from our hand.
Yes, sir, but at
And
times
just
we
adding
have
to
to
what Archana
reverse
says.
permanently also because of the reason or the business call. But then, I mean, then there should be a functionality also that as we are reversing from the temporary reversal, something which has been permanently reversed, then I think we should be taking that relief of 37(4). There is no time limit to reclaim whatever because there is no distinction between permanent reversal and a temporary reversal.
Temporary.
So, Arpit sir, if something has been reversed permanently wrongly, I think we can always take a rectification and we can always take credit and say it was wrongly reversed. That can be done.
Yes, sir. But the only thing is that we would be receiving a notice, and then we would have to submit all the documents and explain them because unless until we do it correctly, there would be a negative figure appearing on the portal that you have excess claimed from a temporary reversal in your credit. So we are discussing that how to avoid that part because ultimately we would be taking only eligible credit and not ineligible credit, but the system functionality works that we would be receiving a notice and then all the replies would be going and then the adjudication would take place.
Yes, sir. That is it. Yes, sir.
Sir, Arpit sir,
Just adding to what Archana madam has said, the same problem of invoice not accepting or getting rejected in IMS also creates an issue for credit note. Some of the invoices getting rejected or not accepted by the recipient, and subsequently when we issue a credit note, we will not be accepting the credit note also. The resultant impact is liability is also not coming down in the month in which invoice is getting rejected. We have to manually do it. And when the credit note is getting rejected by him because he has not accepted the invoice, automatically our outward liability is also getting increased. Again, we have to manually adjust. There will be a notice based on this. This is also I'm facing in some of my clients, sir.
Yes, sir. This is because what is IMS is? IMS is 50% of GSTR2. There, wherein only one-way communication is there. They have not brought the balance 50% wherein the second-way communication is there. So the problem is that we are having only one-way communication, and this is a case which we also faced, wherein we one of our client billed it to a cantonment board. Military unit who had taken a registration. So when we raised the invoice, they did not accept it. Neither they rejected it. And then when we issued the credit note, they started rejecting the credit note. So we had to ultimately pay a higher liability and then go inform the department, and then we were able to reduce it.
Arpit sir, in this case, is it an option that we can go for amendment of the invoice itself and make it zero?
Ma'am, I would not suggest because amendment is something wherein the underlying document has been incorrectly reported on the portal. But wherein the underlying document has been correctly reported on the portal, then the only option is credit note and the subsequent reversal by reduction of liability.
Okay.
But again, Arpit, the main challenge is that Nilesh was also sharing that in these cases, what is disputed by the department is, or Archana ma'am also shared that the goods have never been traveled. So why will you issue a credit note? Because it's not a sale, it's not a sales return, it's not a reduction in rate or whatever. Whatever conditions are in 35, it's not being followed. So why that is precisely the issue which is being taken up by the department. So in that case, whether we should go for refund of excess payment of tax again, which is again a tedious process.
Very tedious process.
Hello.
Yes, please.
सर अपने पास वैल्यूएशन बेस पे क्रेडिट नोट इशू करने का ऑप्शन तो है ना, like if there is upward or downward revision in the value of supply, and if supply has not been done, then valuation is zero. So based on that, we are issuing credit note. So that stand can be taken.
No. We are taking the stand. The view of the department is how can you take 100% error in your valuation? We are taking this ground also that say you are saying reduction in the value. So there is a reduction in the value, but their view is that reduction in the value means it will be reasonable. Like 100, आपको 100 करना था, आपने 120 कर दिया. So that
नहीं,
is
that is correct. it is a supply हुआ ही नहीं है. So on that ground, the value becomes zero. It's not an error. We
No,
can.
there's
I
a
think.
ground. There's
I
a
think
ground
in
that is
such.
excess payment of tax.
अच्छा.
So your COVID
I
means there
think
was
in.
a circular no where you have raised an invoice, but you have not made a supply. So you can issue, so you can go for a refund of that. So they are taking that circular by heart and then they are proceeding on that. That this credit note should have not have been allowed. You should have availed the refund. Though we are also going on revenue neutrality because yes, Ramanji, yeah. Sitaramanji, are you sharing something? Okay.
No, sir.
Okay.
No,
Arupda,
I'm also the same view. The department is pushing for the same reversals. And
Yes.
they are going, as you said, they are going with the true spirit of that. They say that no, excess you pay and then you get the refund later on. They are not
Right.
entertaining for all the adjustments, as you correctly said. That's a problem we are facing, sir.
Arupda, also it is
again,
more challenging in service invoices. Sales return one time they can accept it. For service invoices, it's very difficult to explain them. Because sales return is covered, service not provided is not covered. Because you can raise invoice for services provided or to be provided. But if you have not provided then services, then the section 34 does not cover that criteria. If service is not provided, whether credit note can be issued or not.
Yeah, so in that case, you have to again go. Yeah, that is the main purpose of that circular which was issued during COVID 2020. That if you have issued if you have got an advance and you paid the tax, you have not provided the service, so you take a refund of that. So that circular only is creating the major challenge because that was given with the perspective that many services had to be cancelled. Like you booked a banquet during COVID, and there's this marriage party or this birthday party which could not happen. So the banquets they are not, giving the credit notes and all. So they said, okay, then you can, they were told that okay, you can claim the refund, no problem. Even if you don't issue the credit note because it's not issued, then you can claim the refund because you have not provided the service. So I think that is again.
I think, sir, that was issued with the limited purpose of helping people in the period of COVID, so that there
Yeah,
is
yeah,
no blockage of working capital. But if
right.
you take it to this extent, then I think it will be wrong.
And in goods also another major challenge where we are issuing an invoice and a credit note. They're saying that no movement has happened for return. Where we are saying that no movement has happened for going also. So there is no movement for the
sir,
return.
Then
Yes, sir.
that's why they
sir,
have that refund for excess payment of tax, right, sir?
Yes,
Refund
yes.
application specifically is there.
So that's what the department
I
is doing.
don't think so. It is only for COVID. I think anyone, whoever made a mistake can, go and apply for the refund and take back the tax.
Yes, ma'am.
Sir,
Gurjeet?
may I, sir?
Yeah, Gurjeet,
Am I
sir.
audible, sir?
Yes, sir. Yes.
Sir, yes, all these practical difficulties are there, and we are discussing Section 34 also. And as Nilesh ji pointed out, for services, the invoice can be raised even for services to be provided. Similarly, for goods, the invoice has to be at the time or before the supply of this. So for goods also, it can happen that the invoice is raised and there is no movement of goods, etc. So should we issue a credit note? Sometimes it is also practically happening that the recipient um, since the invoice has not been received by the recipient per se because supply did not happen or he did not receive anything, he does not acknowledge or he is not required to acknowledge the same in their books of accounts. Leave aside the concept of taking the ITC and then reversing that ITC. Uh, Keeping all this in mind, I'm not going into that whether the services in Section 34, if services are not provided, can we say it is deficiency in services are provided? But I'm trying to put thoughts into what one of our colleagues just said about can we amend the invoices and Arpit sir's view. Yeah, I agree with Arpit sir's view at the first phase yes, only if the invoice has been incorrectly reported then it can be amended. But can we think of it like this that if service has not been provided or goods have not yet been supplied at all, and invoice was raised before supply of goods or services, so that is an error in reporting that invoice, so we amend it. And I believe in the portal there is a challenge also. We can't reduce the value to zero in amendment also. It has to be some value has to be given.
So
Can we think on
that's
that
we make
terms? Would the
0.1.
department agree? What are the experiences? Yes, sir, please.
So in that though, we make 0.1 or 1 rupee that we have to keep. That is there. But
Yes,
sir,
sir,
in that,
we have to keep
that
it.
also the challenge with the department, that the department is saying, like, why did you issue at the first tense, like that 100 rupees, So that is
Because the
like,
Act says so that it has to be issued before the before the supply, at the time or before the supply, and even for services to be provided. Act binds the supplier to do so.
actually what is happening
Can we
in
go
some
for
of the,
these terms?
in some of the cases they
Because
have,
we are very sure, sir, we are very sure that recipient is not going to help out in such cases where there has been no supply made.
Ulta now with the IMS kind of a scenario, recipient is creating the issues. What is happening is they are keeping what every recipient will do, of course, they are keeping the invoice pending because it is not there in their books. They are not rejecting it, they are keeping the invoice pending, but they have to reject the credit note because that is compulsory and mandated to reject. We are not getting it. So what is essentially happening is later on they are saying that your credit note has been rejected. So how can you reverse the output tax? I think Archana ma'am was also sharing a similar kind of a challenge. So that is becoming a challenge. And
Yeah, that is why we don't issue a credit note. No, we just go for an amendment because the supply did not happen. We are going to amend the invoice.
And in amendment, the challenge is that the proper officer is saying that why did you at all report it in the previous month if the supply has not happened? Because all these things, what is happening is the errors are sometimes being detected later on because we have already reported and then we are trying to amend the invoice. So that is the main
I'm saying
challenge.
only in the cases where the supply has not happened and it has been reported there. Yeah.
Gurdeep
So for
sir,
that,
we know, sir, how easy it is to get a refund from the department. Without, I mean, to convince them that it was an excess payment of tax.
That is another problem. So out of these three scenarios, we'll have to choose unless and until let's see what the regime comes. But getting a refund, issuing a credit note, and amending the invoice. These are the three options for which is practically more appropriate to implement and have the background and paperwork ready if there are any queries asked. We should have reasons somehow.
Gurjeet, so in case of amendment, that is what we are precisely doing, keeping the documents ready. We are taking declaration from the suppliers that wherever it was possible that they have not received the goods or whatever, they had to cancel the contract or the quality was the problem or whatever. So wherever we are getting it, so we are getting, because in some of the industries, what is happening, you have to send the QC certificate before the movement of the goods. So whenever we are sending the quality certificate, say there is a moisture content thing and the moisture content is high, carbon content is high. So at the outset, they are saying don't send this material only. But what is happening is the invoice is already raised because as per the delivery order, the invoice has to be raised before the supply is made to them. So in all these cases, we are at least getting a declaration that because of this QC issue, they are not going to accept this particular order and therefore they cancel the thing. But the invoice was issued. So all these declarations we are trying to get. But still, I think we would like to hear from other members. What if other members have tried out
And so we should further one. We should treat it as a cancellation of invoice and we should report it in the GSTR1 where the documents details are given. And we should declare it as a cancelled invoice there. And since there is no other cancellation procedure in the return filing as such, so we'll go for amendment.
So this is
Sir,
Gulab Sajid.
when we are talking for cancellation, then we are meaning that cancellation within 24 hours only, correct?
Yeah, that's what I was going to say to you. So that
the
they
cancellation of e-way bill for invoice also is it for 24 hours?
Yeah, e-invoice can be cancelled within 24 hours only. After that, you cannot cancel.
No. Yes, that e-invoice cancellation, that is a separate issue. That is a separate issue. Yeah, between e-invoice and otherwise the invoices being reported, if we go through amendment, it will come there itself also. The transactions will happen. Otherwise, if we don't go for amendment, then the mismatch would be there. We are not going to cancel the invoice as such. We are going to amend it on the portal as far as the portal thing goes, though in fact it has been cancelled. This is the approach if we consider appropriate, if we try to follow and see what are the repercussions there. So we are aware of the difficulties for refunds and for issuing credit notes only in these specific cases where the supply has not actually happened. So can an amendment be an alternative?
Sir, if goods are not delivered or dispatched, but e-invoice is already issued. But in the tally program, they have cancelled it afterwards. And at the time of filing GSTR1, what we are doing, we are deleting that e-invoice entry, and we are supported it that we have not issued any e-way bill. Plus, we have we have done the cancellation, and that cancelled document is given in GST1. Will that suffice?
Yeah, if it is cancelled, then I think it will suffice.
It's cancellation. We don't. It was not cancelled within 24 hours.
E-invoice was not cancelled. You are saying e-invoice was not cancelled within
E-invoice
24
was
hours.
not. No, we delete
In that case, sir, I believe still you will be getting notice, system generated
Yes.
notice from the department, and then you will have to explain at that point of time as well.
Naturally, that has to be there because we
Sir,
have did that. And
in my opinion, see, sir, if we go through the entire structure of the statute, once an invoice is issued, that becomes a document which has to be either cancelled or has to be nullified by way of credit note. If the underlying document is there, and if we are only amending it in GSTR1 or reducing in our books and then reducing in 3B, then in such case there would be no tracking of how the documents are being issued and generated, and this was the precise reason that e-invoice was brought in, that whatever, and if we go through rule 48.4, which is for invoice, that means the details have to be communicated to the portal and IRN would be generated, and basis upon that IRN, that document would be issued. So it would be treating that document is only a document on the portal and it has no relevance. It has the backing of section 31 read with rule 48.4, and any reporting beyond or lesser or more than that document is itself an incorrect reporting unless until it is backed by a credit note. So this is my opinion, that even if we have a genuine case, but then the department would also always say that you have to follow the process which is there in the law. It might be a case that you might be getting a refund late. Alternatively, you might argue that there is a deficiency and therefore we have issued a section 34. So in my opinion, if we issue a credit note and then we litigate, it would be a much more better scenario within the four corners of the law rather than amending and reducing it into zero, because
Yes,
even
sir.
then.
Yes, sir. Arpit, sir. Yes, sir.
Yes,
We
sir.
can agree to that also, and we can just for this pay attention to the proviso which is there for credit note. The proviso exactly says that ITC is as attributable to such credit note if availed has not been reversed. So if availed is there, and then there is point number 2 also, that incidence of tax on such supply has not been passed on to any other basis, any other person in other cases. So if we should go for both these lines, first we should then fight it out that the other person has not availed the ITC, so there is no question of reversing it. Or we can go for the second point. Yeah, it is not a case of ITC availed. It is a case where the incident, we have not charged the customer anything. He has not paid us anything. So that incidence of the tax involved has not been passed on. So there is no issue of reversal. Then we should fight on these legal points itself, because that is given in the section itself within the proviso. If someone can share the screen.
Yeah, I'm sharing the screen. In between, I'll
Yes,
go
sir.
to.
Even I think we can add that also, that for quantity revision, like if you have raised invoice originally for 100 units and then it's 90, you can naturally issue a credit note. So why cannot we issue credit note for 0? Like that stand can also be taken. Na?
And what
Yeah,
about
but-
second proviso to
So,
section
ma'am,
37, sir?
ma'am, so I'll just take
Yeah.
1 minute from you. We'll go to ABCD and company. Sir, आप थोड़ा नाम बताइए अपना sir. Yeah,
Hello,
yes, sir.
sir. Yeah, this is Gulab Sajid, sir, from ABC
Okay.
Company.
Yeah, please.
Yeah.
Please.
Yeah, sir, regarding the point which you have made on that on approval, like the material you send for quality before the quality checks happens. So
Good
on
send
those
material.
cases, on supplies of those kinds, can we sell material on approval on delivery challenge rather than e-invoice, so that those problem of rejection and material of and reversing of invoice can be avoided. That is one suggestion or one opinion in my view, sir. Of course, it depends on business to business and transaction to transaction.
Yes. Actually, this is regarding this concrete mix. So what happens is in that case, so especially in concrete mix category, what happens is that they don't work on sale on return approval basis because they have this procedure of receiving the GRN totally and only for accepted material. So that's why we are facing this problem. But otherwise, so whatever you have suggested, that's a suggestion that is wonderful. That in case of this QC issues, you can always issue a delivery challan on either the 37, I think the 31(7) sale on return or approval basis, and then maybe the issues will be resolved. You don't have to issue an invoice and a credit note, and all those things will be there. I think I agree to that. So now we'll go to Soumya ma'am. Soumya ma'am, yeah. Soumya ma'am, you wanted to put.
The second proviso to section 37(3), which says that any rectification order in respect of details furnished will be allowed. Oh, but that is only for 3B, is it? That second proviso to section 37(3).
No, ma'am, it is for GSTR 1 only, section 37.
Yeah, but second proviso to section 37(3), can you see, sir, once?
The payable in cash.
Or first proviso, actually.
Okay.
Yeah, first proviso says that if there are any errors, come down a little bit.
Yeah.
The first proviso says any no rectification can be in respect of details furnished under subsection 1 shall be allowed after 30th November. So we are allowed time up to 30th November to correct anything under what is reported in GSTR 1. Then why not, amendment is not allowed in this case?
Yeah. No, that is, see, if you see the word error has been issued, it has been there, it's there. It's not that it's only about omission. The word error is there, but the perspective of the revenue is that how can you make an error in valuation? See, where there is an error in GSTIN, maybe that is okay. Like I have a proof that there is a work order from Mr. X, but mistake, I have issued the invoice to Mr. Y in whatever rush or whatever. But their concept is that where the order is for 100 rupees and you have issued the invoice for 100 rupees, how can you reduce it to 0 later on?
Yeah, that is true. Valuation is
Whether that is an error or that is some kind of adjustment that you're trying to do. You have made the supply and now you want to. So all those questions come in.
correct.
Okay, so I think, yeah. Any other views on this? Any other inputs you want to share?
Arupji, Gurjiji was
Yes.
saying about section 34.
Sorry. Yes. So 34, yeah. So is it
Arunji,
visible?
I have a.
It is not shared.
Okay, I'll just share. Yeah, so yes, ma'am, please.
Yeah. Arunji, I feel that, ignorance is bliss. So by looking at the conversation that you all have, like when I'm reading it as a, layman, what I understand from this new amendment is that it has clarified certain things and it has removed the condition of availing post-sale discount, right? So
Yes,
it
ma'am.
means that it is either, there were conditions attached to it before the amendment stating, you should have mentioned in your contract and other stuff. But now
Yes.
after this amendment, what is going to happen is that there are two ways of looking at it. One is that if you issue a credit note, yes, obviously the recipient is going to, he is not going to avail the ITC. So ITC is going to be denied. Right. So second, even if it is a credit note, financial credit note, that would be treated as a consideration. So in such case also the supplier is going to pay the output tax credit, right? Output tax, right?
Ma'am, but what I read, I
Ah.
think they have mentioned that it will be necessary to issue GST credit note. Financial credit note won't be allowed, like from their language, what I was able to interpret.
That's what I understand, because if financial credit note will also be treated as a consideration, means that you issue if you want to financial credit note, but still the supplier will end up paying the output tax, right? Is it not that meaning? Just by plain reading.
Exactly.
Yeah.
Exactly.
So one is that IMS will take care now after whatever, ITC, if it has to be reversed or whatever. Otherwise, the supplier is going to pay the output tax, right? So either way it is taken care. Only thing is that valuation, as rightly pointed out by Arup ji, if 100 rupees is the sale value, if somebody is going to give a discount of 100 rupees, the government will end up losing the revenue. So that's the only thing which we have to be careful. Is it not so?
No, regarding, sorry.
See, supplier is selling the goods for 100 rupees, say for example, right? And he's issuing a credit note also a credit note also for 100 rupees, stating that it is a discount. Only in such scenario, the government is going to lose revenue. Otherwise, is it not that simple as I read? Only in such case, government will lose revenue. Otherwise, by amending section 15(3)(b), will it not simplify the whole process? Of course, prospective, retrospective, that is a different story. But
no, it will simplify. That's why it's a welcome move by the trade. So this is actually accepted by the trade, and this is welcomed by the trade also.
So only thing what the government has to look at it is from the valuation perspective. If what happens if the supplier gives 100% discount, like post-sale discount of 100%. So only in such case, government will end up losing revenue. That's the only problem I see. But by looking at various practical issues,
like if you are talking about 100% discount, that definitely means that payment has not been done for XYZ reasons. And ultimately, if they conclude that, okay, supply was not done and hence a discount of 100% or deficiency in service or sales return or whatever was the reason for which the 100 rupees credit note was issued. So I think that is a valid base. If payment has been done for even 50 rupees, then definitely nobody can issue a discount of 100 rupees just because they wish to. They will have to pay GST on 50 rupees if consideration has been passed. So in that case,
assuming if they
ledgers
give a
will speak.
discount of 90 rupees, 10
Correct.
rupees consideration is received. In such case, also government will lose revenue.
Correct, but government have to prove that consideration was there in other than monetary terms, like there was consideration in kind if they can prove. Otherwise, 90 rupees discount is there in the ledger.
Yes. So now we'll just go, I think, Arpit ji.
Yes, Arunji.
After taking into consideration what Sujata ma'am says, I think we'll go to 34 again, 34.3, as we are discussing, I think.
34.2, Guji sir was saying.
Yeah.
34.2, the provisos, sir. The proviso that no reduction in output tax liability of supplier shall be permitted.
Yeah.
Maybe currently 34 is not providing for post-sale. Probably going forward, it is going to cover even post-sale, right?
Yeah, since they would allow, they will, in 15(3)(b), they will make an amendment that pre-agreement is not required. So we were talking about this, sir, that ITC, if availed, has not been reversed. So reduction in output credit liability, output tax liability will not be allowed only if the ITC, if availed, has not been reversed. So that means ITC has to be reversed only if availed. So if we are going to fight on legal points, we should consider this point. And we should the second point, the after the or. So the cases where we were talking about that no supply at all has been made. So if no supply at all has been made, that means nothing has been charged from the consumer, no debits in the accounts, in their account that has been reversed, no payment received or no adjustment there. Then we can also rely on the second point that the incidence of tax on such supply has not been passed on to any other person in any other cases. So the other cases, in other cases, we are meaning yes, no supply happened. So no incidence of tax has been passed. So no reversal of ITC is required and we can reduce our liability, the output
But sir,
tax
this will create problem after
from what
IMS
Arpit sir was saying.
started.
No, sir.
Because people accept in bulk, people do not do one by one.
Himanshu, let's just request the Gurjit sir to finish first and then we'll take it up again. Gurjit sir, yes.
We are talking about taking forward what Arpit sir was saying, that we go into the four corners of the law itself. So if we wish to remain within the four corners of the law, then within the law there are these points available to contest the department's thoughts, that they, when they say that no, ITC must be reversed, if it has not been reversed, we will not allow. The proviso allows that at two places, if availed and if the incidence has not been passed. So where do we fall, or do we fall in both of them? So those are the grounds which we can take. So it always matters down whether we are within these, trying to stay within the four corners of law, or we are trying to find out a convenient method where we don't get notices itself
I think
in
the
practical
second option is
scenarios.
chosen by the clients. Notice नहीं
Yeah,
चाहिए.
notice नहीं चाहिए. तो अगर notice नहीं चाहिए, then we'll have to follow the amendment routes, etc. If
But
we
then,
find
Gurji sir, then
two
also there would be
corners of
notice
law,
between a mismatch in one and three, one and e-invoice data.
yeah, that would be there. Yeah, the one and the invoice data, but there are things to be said, no, that whatever is in e-invoice, it is not that everything should not be reported. Only the correct things should be reported in GSTR1 and consequently in 3D.
So yeah,
That
Himanshu ji,
caveat is
your
also
views,
there
please.
with e-invoices. But this is besides from the point Sujata ma'am is discussing, that is about post-sale. Like always in our discussions, we have moved from the post-sale discounts to the credit note itself and the other scenarios.
Sir, this is one more point to add to what Arpit sir says.
Yeah, Praveen ji, yeah.
Yeah, yes, sir. Sir, as far as this amendment is concerned, sir, amendment is covered, let's say, for GSTR 1. If we come to, let's say, even 37 subsection 3 for that matter, sir. It says any registered person who has furnished the details under subsection 1 for any tax period shall, upon discovery of any error or omission therein. So this discovery of any error or omission is with regard to furnishing of the details and not of the details per se. So if the document is correct and the reporting is incorrect, then the amendment is allowed. But if the document itself is incorrect and the reporting has happened according to the document, which is incorrect, then the amendment may not be permitted, sir.
I think, yeah, this is a good point that you have raised, yes. Who has furnished the details under subsection 1 shall, upon discovery of any error or omission, therein rectify such errors or omission in such manner as may be prescribed. Okay. So document vis-a-vis reporting, I think that is something that needs to be seen. So, yes. So, yeah, Himanshu ji, you wanted to share something?
No, I only wanted to say two things. One is that once if you have reported something in e-invoice and then it gets travels through IMS to the recipient, and like what we observe here, even the big companies are not checking their IMS and doing accept or reject. So it gets accepted by default. And then if we issue credit note, they will, like earlier somebody said that they will reject credit note. So
Yes.
in that case, it will be difficult to prove that they have not taken ITC, even though we have cancelled the invoice. There is no payment, and like sir just said, that if there is no supply and incidence has not been passed, but that will be difficult to prove based on what portal says. So that will be one challenge. And second, how I see this credit note whole matter is that the section only restricts, or section is earlier made with the view to just restrict post-sales discount which are not pre-agreed. Rest, I think they are intending to allow all the cases like sales return or deficiency in service, or whether it is a quantity discount or all kind of cases. Only cases where random discount is given without any agreement, they were trying to restrict that. Now officer travels and take any other view just to take a different stand. I think that can still be contested, and here we are not facing that issue much.
Okay.
I agree with you, sir. Himanshu.
Sir, I just wanted to highlight one issue that we are facing in audit. As Gurjit sir has rightly highlighted the second proviso, they are alleging that when we are issuing a financial credit note, we are not reducing our tax liability. So they are saying that this is the mechanism, it is being used by the businesses to transmit the extra credit that they are having so that the other person can utilize and they can settle it down. So even these kind of allegations are popping up at the time of audits.
Yeah, sorry, Rachel, ma'am. The last part, I think there was some drop. Can you please repeat the last part, ma'am?
They are saying
So
that you
those
are
are
issuing
innovative allegations,
financial
sir.
credit note just because you want to transfer the additional credit which is lying with you. So you are passing that credit and then you are issuing a financial credit note so that, I mean, they are saying, alleging that this is the way you are settling your extra credit balance that is lying in your ledger.
Best example, I think, for this can be the situation where refund is not allowed in case of inverted duty structure. Like for Zari, we can say, or earlier on Fabric, here people used to do that. They used to raise invoice of 100 rupees and then issue a credit note of financial credit note of 10, 15 rupees so that ITC gets passed on because they are not getting refund anyway. Earlier it was done.
But ultimately, in my opinion, if the goods have been supplied and the invoice has been raised and the tax has been deposited, how our consideration is settled between me and my recipient has nothing to do with the department, because an amount has to be paid which has been agreed between the supplier and the recipient. So if the supplier agrees to pay a zero, agrees to receive a zero amount, and the condition then under section 16 have been duly complied, then in my opinion, department cannot raise a question that you have issued a financial credit note just to transmit the credit, whatever may be the reason. Because if that would have been the case, then specific condition would have been there that the amount pertaining to invoice has to be paid by cash or bank, and only that credit would be allowed, which is relating it to the payment through cash or bank. And how the department raises a query that just like just how innovative we are, they also are very innovative in raising the issues.
Then what will happen to section 16(2)(c)?
16(2)(c) tax duty has been paid, ma'am. Tax
so
has been paid. Only the consideration has not been paid by the recipient to the supplier.
Yeah.
Tax has been duly
agree,
deposited
sir.
by the supplier.
Yeah, I totally agree, because even the condition of 180 days, it is said when it is due, and something which is not due, so that will never be paid.
Yes. It cannot be a case that I forcefully go and deposit the amount in the bank account of the supplier and then he gives me through check again.
Correct. So these are few of the provisions which are, I mean, I don't know why the lawmakers wanted to be in the shoes of a businessman.
No, that was because of the pressure from SSI, small scale MSME. So
No, but sir,
SME,
MSME is again guarded by another law, na? And they never see, the GST officers don't read GST law in the peripheral of other law. They say GST law means GST law. They are not concerned what we are doing in income tax, what we are doing in any other act, because they are also forcing the payment provision that when you are supplying to an SEZ unit, though it is like a related party under section 25, still they are asking that where are the EBRCs, where is the payment receipt evidence. So they are only reading the law in a literal meaning.
Right.
But ma'am, what I think is that by making this change, they are not trying to plug that loophole, because that is not a very big issue compared to what this small scale people are facing. Is that for any discount that they are giving, they are usually having a verbal agreement. Now, in case of any audits, officers will ask, okay, give me written agreement. Where is it written on invoice? And that's not fixed. That's an understanding. So I think that is a mass problem, and at the small scale to maintain all those things, it's a really big challenge. So I think they are trying to give that ease to the small scale. They're not trying to plug, because that is not creating any revenue loss for them. That strategy is anyway not being followed by a lot of people. It's a very few instances are there, and it's not a very big revenue issue for the department. I think they are trying to give the benefit to small scale by making this change.
I think before we close, Arpit, before we close, I think I would like Deepak ji. He's there in the meeting. Deepak ji is there.
Yes, sir. Yes, sir.
Sir, some views from you. I think I would like to share that this PPT is shared by Deepak ji only, but due to some constraint, he could not lead today. But yeah, Deepak ji, your views.
Sir, post-sale discount, I think, in the garb of simplifying it. Earlier, there were two conditions, and officers, we used to tell that if it is a post-sale discount, show me the compliance of the conditions of Section 15 and Section 34 both, saying that where is the pre-agreement and how can I legitimately allow you the reduction in your output. In spite of the recipient reducing his ITC, reversing his ITC, this was a question. Now they are trying to simplify it. I think a lot of questions coming up that once we have a fine print, I think then it'll be advisable that we read through the fine print and then again come back to this. Of course, this is not this is a change in law, so we will have to wait till that happens, not a immediate action for the 22nd September. But yes, these pointers will definitely be helpful, sir.
Thank you, Deepakji. Now over to Arpitji. Yeah.
Thank you, Rupji. And first of all, thank you, Deepakji, again to providing, although you might not be there due to some exigency, but your footprints are there through your PPT. So you are always present with us through your PPT, and in the end you are there. You are here only. So thank you to you for the preparation and the participation you have taken as a speaker and to lead the session. And thank you to Arupji for leading in absentia Deepakji, and to all the participants also to join in the discussion. And it was not as if it was led by some one person, but a combined discussion on a topic. And today's discussion highlighted at how a provision might be hampering us into a day-to-day working and how it can impact a business in a large manner. Because when we are reading through the law, it might seems to be a very small provision, but when the practical implications are there in the ground, it is a very big provision, and compliance of that is very difficult. And circular number 212, which is sought to withdrawn, it was initiated through the advice of Rajasthan High Court. In case of Hindustan Lever, it should be there. So circular number 212 was brought in. Now they have realized that it is not proper. So thank you to all the participants for such an engaging discussion. Thank you very much.
Sir. Thank you so much.
Thank you, everyone. Thank you. Have a wonderful evening. Bye.
Thank you to all.
Thank you.
Thank you.
Enjoy your weekend.
Thank you, Arup sir. Thank you for such a wonderful coordination.
Thank you.